The exit strategy question. Take a slow breath in and out. Let your shoulders drop. Now picture this, you're in the pitch. It's going well so far, strong traction numbers, clear market opportunity. Then an investor leans forward and asks, "What's your exit strategy?" And suddenly your mind goes blank. Because you haven't really thought about this. You're so focused on building the company, on growing it, on making it work, that you never stop to think about selling it. So you say what feels true. Well, I want to build a great company. I'm in this for the long haul. And you watch the investor's face change. They lean back in their chair, so you don't have an exit strategy. Another investor shakes their head. I'm out. And you're confused because weren't you supposed to show that you're committed, that you believe in this? Here's what just happened. You thought exit strategy was about when you're giving up, like they were testing your commitment. But that's not what they were asking at all. What they really wanted to know was, how does my money turn into more money? Because here's the thing about investors. They put money in today. They need to get money out tomorrow. Usually 10 times more money. And there are only 3 ways an investor gets their money back. Someone buys your company. Your company goes public. Your company pays dividends. That's it. Those are the only 3 ways. So when they ask about exit strategy, they're really asking, which of these 3 paths are you building toward? Because if you haven't thought about it, then you haven't thought about how their investment actually works. Now imagine you understood this before you walked in. Same question comes. What's your exit strategy? This time you don't freeze. You say, we're building to be acquired by enterprise software companies that need AI capabilities. Think companies like Salesforce or HubSpot. They both acquired similar businesses in the $20 to $50 million range. That's the profile we're building toward. Notice what just happened. You didn't say someone might buy us. You said exactly who would buy you and why it makes sense. You showed them comparable acquisitions. You gave them a specific number range. Or maybe your path is different. Maybe you say, we're building to 100 million in revenue with 40% profit margins. That's the kind of business private equity firms pay 8 to 12 times profit for, which means a $400 million exit for shareholders. See how you just walked them through the math? You showed them exactly how their investment becomes 10x. Here's what makes this credible. You're not making up fantasy acquires. You're pointing to real data, real acquisitions that happened, real multiples that companies pay. Because when someone says, Google might buy us, the investor immediately thinks, why would Google buy you when they can build this themselves in 6 weeks? But when you say, in our category, there have been 6 acquisitions in the last 3 years, average price 4 times revenue. We're projecting 20 million in revenue, which puts us at an $80 million exit. Now they're thinking, okay, this person has done their homework. So here's your preparation work before any pitch. Go research acquisitions in your space. Find out who bought whom, find out what they paid, find out what multiple of revenue that was. Then identify 3 to 5 companies who might logically acquire you. Not because you hope they will, but because they have a history of acquiring companies like yours. Then run the math. If you hit your revenue projections and you get acquired at the typical multiple for your industry, what does that exit look like? And what does that mean for an investor who puts money in today? Picture yourself 3 months from now. Same investor meeting. They ask about your exit strategy. This time you're ready. Strategic acquisition in 5 to 7 years in our space. Recent acquisitions. trade at 3 to 5 times revenue. We're building to 50 million in revenue, which creates a $150 to $250 million exit for your investment today. That's a clear path to 10x returns. And you watch the investor's face, they're nodding, because you just answered the question they were really asking. Not when are you giving up, but will my money grow here? Take one slow breath in and out. Exit strategy isn't about quitting. It's about understanding how investors win. And I choose to speak their language.